Good day everyone, thank you for joining me. I'm Tamara Kukshinovich and I'm going to take you through Nike's year-end results. Nike is a quality retailer which shows broad-based and strong top-line growth. This is supported by sound execution, strategy investments in digital, and a brand with which customers resonate. The group has attractive operating margins, a high return on equity of 60.6%, and robust cash generation. Further, the balance sheet is strong, translating into a high confidence rating. Nike is a well-run company with a growing market share and plans to enhance margins even further. However, we feel that these attractive growth prospects are fully reflected in the current valuation. The group is trading at a forward PE of about 30 times, which is well above its long-term average of 16.7 times and its 5-year average of 24.9 times. We believe the group's strong brand provides the ability to maintain its competitive advantage to protect its long-term profits and market share. Nike has repeatedly executed strategies well. The digital business, which grew 35% in the financial year 2019, will enable Nike to become more independent in terms of physical retailers, together with having marketing control and improved pricing. With a continuous trade dispute between the US and China, higher US import tariffs will result in higher product costs on multiple apparel and footwear firms. We feel the effect on Nike will be moderate. About a fourth of Nike's merchandise is produced in China, but only a small amount is imported to the US. Most Chinese manufactured merchandise is sold in China. Almost all Nike's apparel and footwear are manufactured outside of the US by independent contract manufacturers. For the financial year 2019, Vietnam produced 49% of footwear and China produced 23%. In recent years, the group has moved production away from China to decrease costs and improve efficiencies. We believe Nike can further avoid tariffs by importing more products from Vietnam and Thailand. Revenue in Greater China increased by 24% to $6.21 billion on a constant currency basis and contributed 15.87% to total revenue. Nevertheless, over the longer term, trade conflicts resulting in a US or Chinese economic slowdown may prove to be a headwind. Nike Inc. revenue rose by 7.5% and revenue for Nike brand increased by 11%, mainly due to Nike Direct and wholesale and double-digit growth across footwear and apparel. Nike Direct revenue increased by 16%, supported by a 35% decrease in digital commerce sales, a 6% rise in comparable store sales, and the addition of new stores. Wholesale customer sales increased by 10%. Converse sales grew by 3%, which was driven by double-digit growth in Asia and digital. However, decreases in the US and Europe slightly offset it. Gross margin increased to 44.7%, supported by higher average selling prices, growth in Nike Direct, and the impact of foreign currency. These profits were slightly offset by higher product costs. Net income increased to $4.03 billion and diluted earnings per share by 5.1% to 249 cents, mainly because of strong revenue growth, gross margin expansion, a lower average share count, and a lower tax rate. Higher selling and administration costs partly offset this. A year-end dividend of 44 cents per share was declared, resulting in a full-year dividend of 86 cents per share. In conclusion, we would recommend an underweight exposure relative to the Dow Jones Global Titans 50 Index. If you would like to place a trade, please speak to your financial advisor or contact the dealing desk. A comprehensive company analysis report on Nike can be found on the PSG online trading platform. Before we end off, please take note of the following disclaimer. Thank you.